Welcome to Hibiscus Petroleum's Financial Results webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 31st December 2020 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad or the company solely for general information purposes and shall at all times be heard and or viewed together with the full quarterly report for the same period that has been made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs, and projections about future events or matters. By listening to and or viewing this webcast, you agree to the limitations and notifications set out in the disclaimer section of this webcast. Our presentation today comprises 6 components. In part 1, Lily Ling, our Senior General Manager, Corporate Development, will discuss the overall oil market outlook, together with updates on the group's reserves and decarbonization strategy. In part 2, Dr. Pascal Hoss, the CEO of Hibiscus Petroleum Berhad, will provide an overview of performance at North Sabah, our Malaysian producing asset. Goloka Ravi, Manager, Economics and Business Planning, will provide an overview of and an update on developments at the Anasuria cluster, our UK producing asset, in part 3. In part 4, Mark Payton, the CEO of Anasuria Hibiscus UK Limited, will then provide an overview of the status of the development project relating to the Marigold and Sunflower discovered oil fields located offshore in the UK continental shelf. In part 5, Yip Chi Yong, or CY, our Chief Financial Officer, will present the highlights of the group's financial results for the second financial quarter ended 31st December 2020. Joyce Vasudevan, our Head of Corporate Finance, will then conclude our presentation with some of our key messages for this quarter in part 6. Should you have any queries, you may contact our Investor Relations team via the email address provided at the end of this presentation. I shall now hand over to Lily.
Hello, this is Lily Ling. I am the Senior General Manager of Corporate Development at Hibiscus Petroleum Berhad. Let me commence this presentation by providing you with a brief outlook on the oil market. Referring to this chart by Rystad Energy, the extra production cut announced by Saudi Arabia for February 2021 and March 2021, together with OPEC Plus compliance to previously agreed cuts, has helped balance the market. Demand is expected to recover in 2021. However, Rystad Energy believes that the extension of OPEC Plus cuts from April 2021 onwards will be vital to ensuring a balanced oil market and consequently a stable oil price. A decision on production cut tapering will likely be made during the 3rd to 4th March 2021 OPEC Joint Ministerial Monitoring Committee and OPEC Plus meetings. This chart, also by Rystad Energy, shows the historical Brent price together with the futures curve and their Brent base case projection to 2025. Based on their analysis, oil prices have recovered to levels not seen since February 2020 due to the COVID-19 vaccine rollout and continuing OPEC Plus production cuts. Downside risk remains, owing to concerns about how fast demand will recover and how effective the vaccine rollouts will be. Analysis conducted by JP Morgan has shown that in the last 100 years, there have been 4 commodity supercycles, and that the last oil supercycle started in 1996. Referring to the chart, JP Morgan believes that the last supercycle peaked in 2008 after 12 years of expansion, bottomed out in 2020 after a 12-year contraction, and has likely entered an upswing phase for commodities. Main drivers to this upswing are a post-pandemic recovery, ultra-loose monetary and fiscal policies, weak US dollar, stronger inflation, and unintended consequences of environmental policies and their friction with physical constraints related to energy consumption and production. The chart on this slide depicts our updated net entitlements as at 1st January 2021 across the various assets. As of 1st January 2021, our total net proven and probable, or 2P reserves, stood at 45.8 million barrels of oil, while net 2C contingent oil resources stood at 69 million barrels. In September 2020, we announced that our indirect wholly owned subsidiary, Anasuria Hibiscus UK, was offered the award of 3 licenses for blocks located in the UK North Sea. This was part of the 32nd offshore licensing round launched by the UK Oil and Gas Authority in July 2019. In January and February 2021, we executed the license agreements for all 3 licenses. The 2 maps show the locations of the respective blocks. We believe Til West and Kilrami to be potential tieback candidates to the Anasuria FPSO and the Marigold development respectively. Based on our internal estimates, Til West contains 2C resources of approximately 7 million barrels of oil net to Anasuria Hibiscus UK, with first oil being targeted by calendar year 2023. The license terms commence from 1st December 2020 for a period of 4 years, being the Field Development Plan or FDP phase, with a subsequent production phase to begin for a period of 18 years from the completion of the FDP phase. In view of the urgency to address climate change, oil and gas exploration and production companies have been urged to act as responsible stewards in the world's effort towards carbon management. As a result, we are developing a structured approach to gradually meeting net zero objectives both in the North Sea and Malaysia, and over the course of calendar year 2021, we will disclose our near-term strategy in this area. I'll now hand you over to Pascal to provide a business overview of our Malaysian North Sabah operations.
Hello, I am Pascal Hos. I'm the CEO of Sea Hibiscus Berhad. Sea Hibiscus is the holder of a 50% participating interest in the 2011 North Sabah Enhanced Oil Recovery Production Sharing Contract, or PSC. We're also the operator of this PSC. The remaining 50% participating interest is held by Petronas Carigali Sendirian Berhad. The table on this slide shows the operational performance of the North Sabah asset over the past 4 quarters. That is, from the 1st of January 2020 until the 31st of December 2020. During the current quarter, the North Sabah production facilities recorded an average uptime of 92% and an average OPEX per barrel of $13.32 per barrel. Average daily gross oil production for the current quarter stood at approximately 17,660 barrels. These metrics all showed improvements from the previous quarter following the completion of maintenance and drilling activities. Furthermore, during the current quarter, we conducted 3 crude oil offtakes with a total of approximately 871,000 barrels of crude oil net to Sea Hibiscus, being sold at an average realized price of $39.91 per barrel. Overall, despite the lower oil prices, we are pleased with our operating performance for this quarter. As previously disclosed, in order to mitigate risks of business continuity caused by a low oil price environment during this period of uncertainty, we had entered into a contract in April 2020 to sell 750,000 barrels of crude oil to Trafigura at an average price of $35 per barrel, to be delivered during the remaining period of calendar year 2020. Of this amount, 250,000 barrels were sold in the previous quarter, with the remaining 500,000 barrels comprising 2 offtakes sold in the current quarter. The deliveries of the committed crude oil volumes have been completed, and as such, subsequent offtakes will not be affected by this fixed pricing arrangement. Referring to the projects shown on this slide, the SF30 Waterflood Phase 1 project development plan was approved by Petronas in October 2019, with water injection having commenced in June 2020. Phase 1 of this project was intended to assess the long-term viability of a full-field water injection development project. The drilling campaign for the St. Joseph Minor and Major Sands redevelopment comprised 4 infill wells at the St. Joseph field, with 3 wells targeting the minor sands and 1 targeting the major sands. The first well spudded on 7 July 2020, and all 4 wells were successfully drilled and completed in the previous quarter. Despite the prevailing low oil prices at the time, the project remained economically viable. Based on stabilized well tests, the new St. Joseph infill wells added an incremental 2,200 barrels per day of production. These results are consistent with our objective of enhancing production from the North Sabah asset and demonstrates that Malaysia is an integral part of our long-term growth strategy. Though no new drilling campaigns are planned for calendar year 2021, we are working towards maturing future projects, including Phase 2 of the SF30 Waterflood project, which utilizes data from Phase 1. In December 2020, we received a Focus Recognition Award from Petronas Carigali, our JV partner, in relation to our 2020 drilling campaign. This was for successfully delivering the St. Joseph Minor and Major Sands project without a lost time injury. Petronas Carigali recognized that our actions resulted in maximizing the value and cash generation for the North Sabah EUR PSC partnership. This award is evidence of the hard work put in by everyone in the company, together with our JV partner Petronas Carigali. We continue to work towards aggressive production targets and the relentless pursuit of cost optimization opportunities without compromising the high health and safety standards that are expected in our industry. Goloka will now take you through the details of the Anasuria cluster, which is located offshore the United Kingdom in part 3 of this webcast.
Hello, I'm Goloka Ravi. I'm a manager in the Economics and Business Planning Group of the company. I'll now take you through some updates on the Anasuria cluster. In Anasuria, the average uptime achieved for the current quarter was 95%, while the average daily net production rate was 3,109 barrels of oil equivalent per day. Both these performance metrics exceeded that of the previous quarter. One offtake was conducted in the current quarter, with approximately 252,000 barrels of crude oil net to Anasuria Hibiscus UK lifted and sold at an average realized oil price of $40.85 per barrel. We achieved an average OPEX per barrel of oil equivalent in Anasuria for the current quarter of $22. Several maintenance activities were carried out on the FPSO during the current quarter, which primarily contributed to the increase in OPEX per BOE when compared to the previous quarter. The performance of the wells is also being actively monitored, and efforts are being continuously expanded to optimize production. Despite the higher OPEX per BOE figure in the current quarter, we achieved our target of reducing the OPEX per BOE to $18.5 over calendar year 2020. Planning is ongoing for a 45-day offshore turnaround of the Anasuria FPSO. This is expected to be executed in the second half of the 2021 financial year. This turnaround will be to improve the reliability and integrity of the Anasuria FPSO, as well as to ensure a safe working environment. Several minor production enhancement projects are also included in the planned scope of this turnaround. Barring unforeseen circumstances, these measures are expected to improve the operational performance of the Anasuria asset. We have been investigating opportunities to extend the economic life, unlock value, and maximize recovery from stranded oil discoveries around the Anasuria FPSO. As part of the UK's 32nd offshore licensing round, launched by the Oil and Gas Authority in July 2019, we were offered the award of licenses neighbouring the Anasuria cluster. License agreements were executed for 70% interest in license P2535, Block 2124D, which contains the Teal West discovery, and 19.3% interest in license P2532, Blocks 2119C and 2120C, which are contiguous to the Cook field. The Teal West discovery will be a key focus area as a potential tieback candidate to the Anasuria FPSO in the near term, with first oil targeted by calendar year 2023. I will now hand over to Mark, who will give you an update on the Marigold and Sunflower assets.
Hello, I'm Mark Payton. I'm the CEO of Anasuria Hibiscus UK Limited. I will now briefly take you through the key points of our interests in Blocks 1513A and 1513B, which contain the Marigold and Sunflower discovered fields respectively. These are development assets which are located in the United Kingdom. This slide shows the target timeline of the Marigold and Sunflower fields as we achieve key milestones towards our first oil objective from these assets. We purchased interests in the blocks in which these fields are located, and based on reports from third-party competent experts, they contain 24.9 million barrels of 2C contingent resources net to the group. A schematic of the development concept is shown here. In January 2021, the Oil and Gas Authority of the UK, or the OGA, requested that AHUK seek to work with Ithaca Energy Limited, holder of licence P2158, Block 1518B, which is adjacent to the Marigold field, and propose a common development solution for the resources found in both licences. Work is ongoing to determine whether a joint development would maximise economic recovery from the proven resources in licence P198 and P2158. This work is expected to be concluded on the 26th of February 2021, and a separate announcement will be made thereafter. In addition, AHUK entered into a farming agreement with Caldera Petroleum UK Limited to acquire an additional 37.5% interest in Marigold and Sunflower from Caldera. The transfer of this interest is currently pending approval from the OGA. Upon completion, AHUK's interest in Marigold and Sunflower will be increased from 50% to 87.5%. We are extremely excited by the potential value to be derived from the Marigold and Sunflower fields. We see this asset as a game changer for the group, introducing a step change to our daily net oil production rate from our UK portfolio. It will also establish the group as a mid-size E&P player. On the 12th of December 2019, we announced that AHUK had completed the sale and purchase agreement to acquire 100% interest in licence P2366, blocks 1518D and 1519B, which contain the Crown discovery. As mentioned earlier, we were offered the award of 3 licences as part of the UK's 32nd offshore licensing round, one of which neighbours Marigold. In January 2021, we executed the licence agreement for 100% interest in licence P2518, block 1517A, which contains the Kildrummy discovery. Kildrummy is located approximately 8 kilometres from Marigold. Our licence acquisitions were made with the intention to integrate these contingent resources as part of the Marigold area-wide development, with the objective of reducing overall unit development and production costs. I will now pass you on to CY, who will take you through the financials of the group for the current quarter.
Hi, I'm CY, the group's Chief Financial Officer. I'll now take you through the financial highlights for the current quarter. During the current quarter, the group sold approximately 1.1 million barrels of crude oil. 4 offtakes were conducted, 3 from North Sabah and 1 from the Anasuria cluster. From the 3 offtakes in North Sabah, 871,000 barrels of crude oil net to Sea Hibiscus was sold, while 252,000 barrels of crude oil was sold from the sole offtake in the Anasuria cluster. The North Sabah asset generated revenue of 142.7 million ringgit, compared to 98 million ringgit in the previous quarter. In the previous quarter, 592,000 barrels were sold in 2 offtakes. Average realized oil price per barrel was $39.91, slightly higher than the $39.46 achieved in the previous quarter. Revenue generated in the current quarter increased by 45.6% compared to the previous quarter, mainly driven by the larger volume of crude oil sold. Gross profit margin over revenue improved from 48% in the previous quarter to 53.4% in the current quarter. In the previous quarter, the North Sabah asset performed planned maintenance activities at the offshore platforms at St. Joseph, South Furious, and Barton. The completion of maintenance and drilling activities in the previous quarter resulted in lower average OPEX per barrel in the current quarter of $13.32 compared to the previous quarter's $17.08. Average uptime in the North Sabah production facilities in the current quarter also improved to 92%, compared to 86% in the previous quarter. Consequently, average net oil production increased by approximately 5%, from 6,251 barrels per day in the previous quarter to 6,534 barrels per day in the current quarter. The North Sabah asset reported earnings before interest, taxes, depreciation and amortization, or EBITDA, of approximately 66 million ringgit in the current quarter. The tax regime under which Malaysian oil and gas activities are governed, and is thus applicable to Sea Hibiscus, is the Petroleum Income Tax Act 1967 or PITA. The provisions of PITA are applied to net taxable petroleum income at the rate of 38%. The effective tax rate in the current quarter of 20.6% was impacted by a reversal of an over-provision of tax for calendar year 2019 amounting to 5.8 million ringgit. In the previous quarter, the effective tax rate of 38% was consistent with the PITA rate. Turning to the Anasuria Hibiscus segment in the United Kingdom, Revenue recorded in the current quarter amounted to 46.2 million ringgit, which was fairly consistent to the previous quarter's 46.6 million ringgit. In the current quarter, 252,000 barrels of crude oil, net to Anasuria Hibiscus UK, was sold at an average realized oil price of $40.85 per barrel. Average OPEX per BOE in the current quarter was $22 as compared to $17.53 in the previous quarter. This cost increase was primarily the result of scale squeeze operations at the Gillimore P3 well and reinstatement of certain equipment on the Anasuria FPSO during the current quarter. Due to higher costs incurred, gross profit margin achieved in the current quarter of 55.7% was slightly lower compared to 60.1% in the previous quarter. In the United Kingdom, the total tax rate for Anasuria Hibiscus is 40%, which consists of a ring-fence corporation tax and a supplementary charge at 30% and 10% respectively. Anasuria Hibiscus UK recorded a loss before taxation for the current quarter and was not in a taxable position. As a result, the segment recorded a net tax credit in the current quarter amounting to 10.8 million ringgit. Our business performance is underpinned by several factors, predominantly the price of the Brent crude oil benchmark at approximately the time of a scheduled offtake from our crude oil storage facilities. Given that the oil price is affected by global macroeconomic factors, which are not within the control of the company, focus is placed on the operational performance of the assets, such as production rates and facilities availability, as well as the management of operational expenses. A key metric that we utilize to track our operational performance is average unit production costs. The average unit production costs for both the Anasuria cluster and the North Sabah PSC are well below the average realized oil price achieved in the respective quarters. The careful management of costs to maintain low operational expenditure and the delivery of production enhancement projects are key towards obtaining a low unit production cost structure. This is a significant contributor towards our profitability. In Anasuria Hibiscus, the period-end retranslation of pound sterling denominated balances resulted in unrealized foreign exchange losses due to the appreciation of the pound sterling against the US dollar. In addition, one-off provisions made for calendar year-end related activities also reduced Anasuria's EBITDA in the current quarter. We wish to reiterate that whilst profits are extremely important, management's focus remains on delivering strong and sustainable EBITDA levels as long-term business continuity is of the highest priority. Year on year, both total assets and shareholders' funds have remained fairly consistent. The provisions for impairment for oil and gas assets recognised in June 2020 have been largely offset by net earnings generated from both the Anasuria and North Sabah assets. Shareholders' funds of about 1.2 billion ringgit include retained earnings of 380.2 million ringgit. Net assets per share currently stands at 72 cents. As of 31st December 2020, the group's unrestricted cash balance stood at 102.7 million ringgit. The restricted cash recorded in our results relates mainly to a security for our portion of the estimated cost of decommissioning the facilities of the Anasuria cluster. In this regard, we are required to periodically place monies into a trust, and this commenced 18 months after the completion of the Anasuria cluster acquisition. This activity will continue until such time that the security has been fully provided. The total debt balance as of 31st December 2020, amounting to 128.6 million ringgit, relates to recognition of the liability component of the CRPS upon the issuance of the first two tranches in November 2020. In April 2020, the group signed a deed of supply and collaboration with Trafigura, which covers several areas of commercial cooperation. The agreements with Trafigura form part of an overall plan to ensure that all planned projects across the group are fully funded over the 2020 and 2021 calendar years. In November 2020, we announced the successful raising of 203.6 million ringgit to date through the placement of Islamic CRPS. These funds will be used for the potential acquisitions of producing assets in Southeast Asia. Separately, we will continue to engage with financial institutions and industry players to explore funding options and capital raising initiatives which run in tandem with our growth plans. Before we wrap up, I would like to hand over to Joyce to highlight a few takeaway points.
Hello, I am Joyce Vasudevan, Head Corporate Finance. I would like to close this presentation with some key messages. The 2021 calendar year has commenced on a positive note, with Brent oil prices returning to levels not seen since prior to the onset of the pandemic. Notwithstanding the positive market sentiment, we remain focused on our cost optimization initiatives and ensuring safe and efficient business continuity. In the first half of the 2021 financial year, we conducted 7 offtakes, in which we sold a total of approximately 2 million barrels of oil. We remain on track to deliver 3.4 million barrels in the 2021 financial year. Given the steadily improving oil market outlook, our board has declared our maiden dividend, an interim single-tier dividend of 0.5 cent per ordinary share to be paid on 8 April 2021 to shareholders of ordinary shares whose names appear on the record of depositors on 9 March 2021. In September 2020, we announced that our indirect wholly owned subsidiary, Anasuria Hibiscus UK, was offered the award of 3 licenses for blocks located in the UK North Sea. This was part of the 32nd offshore licensing round launched by the UK Oil and Gas Authority in July 2019. In January and February 2021, we executed the license agreements for all 3 licenses. The Teal West discovery holds the most promise with its close proximity to the Anasuria cluster, making it an ideal tieback candidate to existing infrastructure by calendar year 2023. As part of our strategy to acquire producing assets in areas close to where we are already present, and despite market challenges, to date we have raised over 200 million ringgit through the issuance of Islamic CRPS. These funds will be utilized to acquire producing assets in Southeast Asia. The importance of ESG compliance and sustainability goals have been demonstrated by the increasing number of countries and large corporations setting net zero carbon targets. In light of these developments, we are pleased to have been included as a constituent of the FTSE4Good Bursa Malaysia Index in December 2020. We are also developing a structured approach to gradually meeting net zero objectives both in the North Sea and Malaysia. And over the course of 2021, we will disclose our near-term strategy in this area. In conclusion, we believe that the steps we are taking should meet our business sustainability objectives in the near term, while our business development initiatives will provide us the opportunity to grow our asset base.
And that's all we have for this quarterly earnings webcast. Thank you for tuning in.